You or your firm probably bill based on time spent, but is this a good idea, and are there any better alternatives? Reza Hooda, this episode's guest, believes so, and it's called value pricing. Get ready to have your potentially long-standing view challenged and your mind open to this new possibility. You're listening to episode 91 of the Tax Professionals podcast, the podcast to help tax professionals to progress, develop, and improve your careers.
Welcome to the Tax Professionals podcast, the podcast dedicated to helping you improve your tax career. Here's your host, Jack Bonehill.
Hi everyone, and welcome to this episode. If you spend much time on LinkedIn, you'll have probably come across Reza, this episode's guest. Reza has established a successful accountancy practice that also provides tax advice, and the firm now almost runs completely without him. He now also helps accountants and tax advisors to improve themselves and their firms from what he's learned through his own experiences. He runs a podcast, the Profitable Accountant Podcast, has written a book called The Four Pillars, How to Build an Accountancy Firm that Gives You More Money, Time and Freedom. And he clearly knows what he's talking about. One of the topics Reza talks about, which has always intrigued me, is in relation to pricing and billing. The majority of us in the tax world price based on the amount of time it will or has taken, and Reza says that this is a bad idea for many reasons which he shares with us in this episode. But he also has an alternative, and that is value pricing. He talks us through this with real examples, and he talks us through a real scenario where he won a single project worth over £100,000, and he shares with us some practical tips about how we can price in this way, the value pricing way. For rough timings on each part of the episode, head on over to the show notes at thetaxprofessionalpodcast.com/TTPP91, or head on over to the details section of this episode within your podcast player of choice. The link for the show notes for this episode is the only link you need to remember, as all of the links mentioned throughout this episode are included in there. The show notes can be found at thetaxprofessionalpodcast.com/TTPP91. Key skill for any tax advisor is to be able to provide high quality tax advice, type of advice that clients are happy to pay for and that helps them as much as possible. And doing the CTA qualification definitely helps with learning how to do this. You'll be decent once CTA qualified, but you'll unlikely be excellent at this point. And that makes sense. Qualifications can only do so much, because after all, you are assessed in an exam sitting. However, the better you are at providing advice, the more likely you are to get repeat business from clients, the more likely you are to get referrals, and the easier you will make your manager's life when it comes to them reviewing your work. The list goes on, and this is where the Tax Advice Masterclass comes in. It's designed to teach you how to provide the best tax advice possible. You can get full details about the Tax Advice Masterclass by heading on over to thetaxprofessionalspodcast.com/masterclasses. The next one is in February 2024. Feel free to message me with any questions, and it'll be great to see you or some people from your team at the Tax Advice Masterclass in February. Without further ado, let's get to the episode. Could you start off by introducing yourself, maybe telling us a bit about your background, how you got to where you are today, and what you do now?
Sure thing, Jack. No, great to be here. Great to be talking to you today. So where do you want to start? We could start with, I trained as an accountant with PwC. In terms of how I got into accountancy, I can't say it was intended. I fell into it. I did a degree in international business and French. And as I was applying for jobs in my final year, I was applying for both jobs that allowed me to continue my French. So, for example, management programs with the likes of Renault, Peugeot, the car companies and other kind of French-owned companies, as well as some accounting firms and other management programs. And by the end of my kind of applications and interviews, I had 2 job offers. I had one from Renault, the car company, and I had one from PwC. So that was kind of my pivotal moment in terms of the choice that I made, which essentially then led, to where I am today. So I opted to go for PwC purely on the basis that it allowed me to continue studying. And as I was in still studying mode, I thought, right, can't be doing me any harm by getting a qualification under my belt. And it always helps to act as a buffer, really, because my ambition was always to set up my own business. I didn't know what it was going to be in, but I knew it would be my own business in some way. So that led me to joining PwC in the tax department. Again, I chose tax because I thought it would be easy to get into. Everybody else was applying for audit because they make audit sound very, very exciting and call it advisory and things like that. But in reality, audit is pretty boring, as we know. So thankfully, I fell into tax just because I thought it sounds boring and it'll be easier to get into, and it was. But actually, I was pleasantly surprised because I was doing a 9 to 5, whereas my colleagues in audit were doing crazy 16-hour days. And although the traveling sounds good at the outset. The novelty wears off pretty quickly. So PwC for 5.5 years, qualified as a chartered accountant. I did my ACA there, did my CTA there as well. I was a manager there in the tax department of the entrepreneurial and private client team. And then it got to a point where I was getting the itch. I wanted to go off and do my own thing and set up my own business. I just didn't know what. We had a couple of ideas, myself and one of my friends that worked at PwC, but nothing really got off the ground. And then it was around the end of 2007, I was visiting my father-in-law, and I was in Birmingham at the time, so I worked for PwC in Birmingham. That's where I was living. I visited my father-in-law, who lived in Hampshire, on the south coast, near in between sort of Southampton and Portsmouth. And he ran AFA, had been running it for about 25 years, and he got to the point where he had other business interests and was looking to sell it. So he'd been meeting with other firms with regards to selling his practice. And we got talking, and I thought, okay, well, might be something for me to kind of pursue. I haven't kind of come up with a harebrained idea yet, but this will allow me to kind of shortcut my way to being a business owner rather than having to wait 10 years to become partner at PwC. So those talks evolved, and together with a friend of mine at PwC who was there as well, we agreed kind of a price to buy the practice and got the wheels in motion. But then a few weeks before we were going to leave our jobs at PwC, my friend pulled out. So I was kind of left alone. I had to get a bigger loan to buy into the practice. And so I had to do it all by myself. The due date for me to leave was the end of January 2008. A few weeks later, the world went into financial meltdown, the crisis of 2008, credit crunch, and all that kind of happened. There was no going back. I was the guy that was kind of mortgaged to the hilt. I was the guy that was taking a 70% pay cut in earnings, and I was the guy that was about to start a business during the worst financial crisis since the Great Depression. Hey, such was life, and kind of went into it with all guns blazing, thinking, I can do this. I've been an accountant at PwC. This should be easy. Clearly, it wasn't. It was pretty hard work. Although I was a good accountant, I was a novice business owner. Didn't really have a clue about how to run a business because nobody teaches you how to price your services when you do your accountancy training. Nobody teaches you how to sell. Nobody teaches you how to lead a team. Nobody teaches you how to win work. So I was doing the kind of things that I thought you had to do, what I learned from PwC, like keeping timesheets and charging by the hour and undercutting to win work and micromanaging and getting my team to do timesheets. And we weren't in a good place. We had one client would come in, two would leave. We weren't really pricing very well. We weren't really making much money. We had high staff turnover because people were overworked. And I was micromanaging and doing timesheets. And that kind of went on for a while until sort of 2014, where, life wasn't great. But then I saw an invitation to a webinar on practice growth, kind of promising to solve all my problems. I had nothing to lose by that point. So I decided to register and I attended, and I was glued for that 90 minutes. And what I learned that day was that kind of planted the seed that led to my transformation. And what I learned was that there's an alternative to trading time for money. And the other thing I learned was that I had to invest in myself to become a better business owner, to do the best for my team, my clients, and ultimately my family. So I joined a mentoring program to learn more. And although I was skeptical at first, I started to implement some of what I was learning around the realms of pricing and saw results. So I implemented more and got bigger and better results. And within 24 months, we'd gone from struggling, frustrated, chasing clients of invoices of between £500 to £1,000 to winning a one-off tax project of £135,000, taking our firm to nearly £1 million of revenue with just 7 people. And best of all, doing this whilst working less than 10 hours a week in the practice. So that's kind of an introduction. My mission now is to help accountants. Now my kind of practice runs without me. 4 years ago, I set up my own coaching and mentoring business to help other accountants. So my mission is now to help other accounting firm owners to build more profitable, successful and impactful accounting firms that gives them the time, money, and financial freedom that they deserve without it taking, 10 years like it took me. So that's kind of in a nutshell, the intro, and I'll throw it back to you, Jack.
Yeah. I think it goes to show, by the way, how well you've done with your kind of personal branding and stuff, because until we spoke a few weeks back, I actually didn't know you started in tax. I always thought you were just an accountant, started an accounting business, and then started helping accountants with their businesses. I never realized you actually started in tax. Well, can you remember what some of your business ideas were that you didn't take off the ground, by the way, when you were thinking about doing it with that colleague from PwC?
Some of them are pretty shocking, but the one that I wanted to really pursue was opening up a shisha cafe. Do you know what shisha is, Jack?
Is it when you like inhale something? Is it that?
Yeah, it's one of
Yeah.
those kind of like Arabian, North African type bubbly pipes they call them. But that was the idea. But what happened was this was around 2007, and as we were kind of getting excited about it and looking at potential avenues to open up one in Birmingham, the tobacco ban came in, where they banned tobacco indoors, and that would have also meant that this hubbly bubbly pipe would have been caught as well. So you wouldn't be able to do it indoors. You'd have to have outdoor seating and all the rest of it. So that kind of scuppered those plans. But it was always something around cafe, that kind of thing. I didn't really have any other bright ideas at the time. And I've kind of realized about myself that I'm not really an inventor. I'm not an ideas man, but I can tell whether something's a good idea or not. So unfortunately, I don't have the ideas, but when it comes to discernment, I've done a lot of development, and don't know if you've heard a guy called Patrick Lencioni, but he's written quite a few books. One of the books, his most famous, was The 5 Dysfunctions of a Team, but he's come up with a model called the working genius. Now, the working genius is all around how we each have different strengths and weaknesses, different gifts and different frustrations. And we each have 2 gifts, 2 geniuses, and we have 2 frustrations. And if we are working within our zone of genius, then we are going to feel fulfilled. We're going to have lots of energy. We're going to do our best work, as it were. And if we're doing work that is in our frustrations, then that's going to drain us of all our energy, and we're not going to kind of achieve our potential, as it were. So I figured out that, my geniuses are discernment and tenacity. So I'm good at kind of telling whether an idea is a flyer and I'm going to get things done. But the other geniuses of kind of wondering and invention, don't belong to me. But anyway, we sidetrack, Jack.
Well, it's interesting to say that, though, actually, because obviously you have got, I suppose, what I would describe as like an entrepreneurial side, but it sounds like then you've got the entrepreneurial spirit and all that stuff, but just not with the ideas, just with like the execution, I suppose, if you could call it that.
Absolutely, yeah. So I can kind of see, what others are doing, what's going, and how can I create something out of nothing. That's similar how I kind of fell into this coaching business. That I was actually part of someone else's mentoring program. So a guy called Mark Wickham, you must know Mark. So I joined Mark's program back in 2014, and I learned some of what I know about pricing from him. And as he saw that I was getting results, he invited me to come and do a session for his audience. And that went really well. And he said, you could do more of these around other aspects that I don't teach. So he was just teaching pricing. And I, at the time, had gone on a journey of learning about marketing and sales and developing culture and teams and all that kind of good stuff. And he said, you could do sessions around that and I'll pay you. So I said, okay. And so I started doing that with him. And he said, oh, you can also build up your audience on the side. Never kind of imagining that it would kind of get to the size that it is today. But, it went really well. And I started to build up my own following and members. And it got to the point where we kind of sat down and thought, actually, this is now competing businesses. So we kind of called it a day and went our separate ways, but we're still kind of good friends, and it was a very amicable party.
Yeah. So really, you didn't set out per se to do the coaching and the helping of other accountants. It kind of just happened naturally then, by the sounds of it, from you trying to become a better business owner yourself for your accountancy firm.
Yeah, absolutely. I'm kind of getting results myself. And then, Mark invited me to do a session for his audience. And through that process, just learning that actually I get quite a lot of joy out of helping others out of teaching, actually delivering sessions. It was all done virtually, and then as well through webinars and things like that. And I kind of quite enjoyed that process of distilling everything that I have learned over the years. And I'm quite an avid reader, and I've been, I've done coaching programs from other people. I listen to podcasts. So taking all of what I'm learning from some of the best minds on the planet when it comes to marketing, sales, culture, leadership, and all that kind of good stuff about building a business, and then distilling that through the lens of an accounting firm owner to be able to then help other firms in a systematic way to get the kind of results that they want, that I have kind of achieved in my practice by getting it to run virtually without me.
Yeah. You're doing something I suppose very similar to what I am doing and want to do more of, which is there's lots of information out there, for example, on how to delegate or how to run a business, but there's not really anything out there that's specific to those things in tax. And I think a lot of people aren't good at taking like a general idea and then applying it to their world. Whereas I think that's what maybe one of my strengths. So that's what I'm trying to do a bit with the podcast is, you know, read that book on delegation or read that book on how to win work, which isn't directly related to tax, and then turn it into stuff that is relevant for tax. Tell people who work in tax about it and hopefully help them too. I think you've done pretty much the exact same thing with the accounting side of things. Just you've been in it for a lot longer than me, and obviously you're probably much better than me at doing that at the moment.
Well, anything you do with consistency, you improve. So that's, just stick with it, keep doing it. And yeah, you only get better and better.
Yeah. I think it's probably a good segue then on to talking about the four pillars. So I know that's the title of, well, that's not the full title of your book, but I know that's the premise of what the book is about, is to talk about the four pillars as you've termed them. And as I mentioned just at the start of the conversation, well, before we started having it actually, that I've actually asked my wife to get it to me for Christmas, so I'll be reading it over that period. But just for me now and for listeners, what are the four pillars that you've kind of set out as being like the key areas for any accountancy firm?
Sure. So the background of the four pillars, which, as you rightly said, is the name of my book. So the actual title is The Four Pillars, and then the subtitle is How to Build an Accounting Firm That Gives You More Money, Time, and Freedom. And happy, I've just ordered some books some more books. I mean, my initial allocation went really quickly. I've ordered some more books to give away for free. So happy to send you a link that you can add in the show notes for any listeners that don't have a copy yet, that want to get one. Then happy to share that with you, Jack. In terms of the background of the four pillars, when I started my journey of teaching and coaching and mentoring other accountants, I wanted it to be in a systematic way so I could figure out where are they now and what needs to be done to get them to where they want to. So I listed down all the things that I'd done, all the individual things that I'd done in my practice to build those foundations to get my firm to kind of run without me and be highly profitable and have a team that was engaged and be able to generate inquiries on autopilot and have systems in the practice that enable it to run smoothly and efficiently. And doing that exercise, I realized that actually everything that I've written down could be grouped within four areas. And they turned out to be the four pillars, as I later coined them. And they all start with another P. They are pricing, process, people, and positioning. So the two external pillars, as I call them, are pricing and positioning. The pricing is obvious. Positioning is all to do with how we position ourselves in the marketplace in order to win business, in order to generate inquiries, in order to attract people to want to work with us. That positioning process is to do with our internal kind of processes, systems, that sort of thing. And the last one is people. In order, how do you build a firm and how do you build a culture that is able to attract the best talent, retain your high performers, and maximize everyone's potential? So I believe that if you get those four pillars cemented in your practice and you fortify those foundations, then you'll be able to build and scale any size practice that you want that gives you the life that you want.
Actually, when you were like looking at that list that you put out and you said they all fall into four categories, did they all start with a P originally, or did you then think, oh, I'm going to try and think of a word that describes these things that does start with a P, or did it just naturally fall into four P words?
Great question. And you're right. No, they didn't quite. I mean, I think I had three Ps. I had pricing, I had positioning, and I had people, and I had systems. But systems doesn't start with P. So, what does this process is quite close. So process substituted systems. But yeah, I kind of explain in the book. I actually mentioned that in the book that I had to call it process because it began with a P, but essentially it's all to do with systems. And there is a distinct difference between the two, which I explain in my book in that section, which is all to do with system and process.
Yeah. This is where you've obviously put to use all that marketing knowledge that you've learned over the years.
Absolutely.
So I think what I want to focus on today really then is the pillar of pricing, because I've seen a lot of your LinkedIn posts and I know that you absolutely, well, maybe despise is too far, but I'm going to say despise anyway. You despise time-based billing and anything associated with it at all. So I think a lot of your pricing pillar is probably, I'm guessing a lot of it's going to be to do with that and how to price differently instead. So what is this pillar like all about then? And, I suppose, why is it so important?
Absolutely. I mean, pricing is critical, and pricing is the difference between being able to make money and not make money, being able to have time and not have time, being able to be calm rather than overwhelmed and stressed. And as most of your audience will know, if you're an accountant or even tax advisor, you'll know the basics, right? That pricing is the most powerful lever in the profit equation. When you change your pricing, when you increase your prices, it falls straight through to your bottom line. So if you wanted to grow your practice, if you wanted to grow your portfolio, wherever you are working, then the easiest way to do that is through pricing. Rather than having to go out and win new business, if you just looked at how can I get more from my existing clients, how can I get more from the work that I am doing, and that all comes through pricing. Problem is that most are, and it's not our fault. It's not as if it's not as if I despise it. It's the case that I've been on a journey where I used to do just that. I used to price by the hour because nobody teaches you how to price when you work at the big firms, when you do your accountancy training. So you just do it in the way that they've been doing it, and they charge by the hour and they do timesheets. So you think, oh, that's just the way it has to be done. But actually, that's not the way that pricing works, because as far as your clients and customers are concerned, they don't care how long it takes you to do anything. They don't care about the effort that you put in. They don't care about your costs. In the same way that you don't care about the costs of anything, any product or service that you buy. So let's take a very everyday example. When you go into Starbucks to get your daily coffee fix, you don't stand there trying to work out, right, what is the cost of the coffee beans? That's probably about 30p. What is the unit cost of the milk that's going into my coffee? What is the direct cost what is the direct labor cost associated with making my coffee? What is the apportionment of overhead? What is an acceptable profit margin of, say, 20%? I'm only going to pay £1.40 for my latte. You don't do that. You look at the price in front of you and you make a choice whether that price represents value for money or not. And if it does, you buy, and if not, you walk out. So the only calculation going on in our client's mind, in our minds, when we buy anything is the price I am paying less than the value I am getting? And if it is, I buy. If not, I don't. So there is zero correlation between time and price. There is zero correlation between your effort and price. The only correlation that exists in your client's mind when they buy from you is the price I am paying less than the value I am getting. So it's all about value. But the problem is that value is this really subjective word. Like, we have no idea how on earth do I price the value, and that's where we fall down. Because as accountants, we feel comfortable with time-based billing because it feels systemized to us that, okay, I can count up number of hours and I can charge an arbitrary charge out rate, even though it's got nothing to do with my actual costs. But it feels okay, and it feels as if, it works in some way, and therefore I do it. And the value bit is really hard. It's really subjective. It's woolly, so I don't know where to start with it. And that's why most accountants just fall into pricing by the hour, because they're not quite sure how to transition or how on earth do they price their value.
If you want to be able to provide amazing tax advice, impressing your peers and colleagues, then I suggest you take a look at the Tax Advice Masterclass. There's real examples from work I've done over the years where I show you what's good and bad about them. I also show you what the hallmarks of high quality tax advice that you need to ensure are present in your advice to make sure that you're providing great tax advice. And much more is covered too. Head on over to thetaxprofessionalspodcast.com/masterclasses for full details on the masterclass and also where you can enroll. The next one is February 2024, and hopefully I can see you or some of your colleagues at that masterclass.
A lot to unpack there. Before you said the coffee example, I was thinking of Starbucks, but I don't know if that's because you told me that before, and so I remembered that, or whether I was a genius to think of that on the spot. Okay, then, so I think there's a lot to unpack then with this. Where's the best place? Where's the best place to start? Because obviously there's one element, which is how do you get away from like time-based billing to start pricing on value? What methods or tactics can you have to, like, I suppose, come up with a fee based on value rather than time, and a bunch of other things, right? So these are, like, I suppose, just some of the initial thoughts that are going through my mind anyway, based on what you've said so far.
Yeah, sure. So I guess there's two big myths that I dispel in the book. So the first chapter of the book is called Banishing the Myths Around Pricing. And the myths are essentially that there's two big myths. One, that we sell time, and two, we need timesheets. And I kind of dispel both of those in the book. So the first one we kind of just look, we have just spoken about in the sense that we sell time. We don't sell time. Nobody is buying time from you. And I think if we really thought about that in the context of what I just mentioned about costs and effort in anything that we buy, we're not really buying time. Clients are not buying time from you. What they're buying a result. They're buying some sort of outcome, and they're buying a solution. That's what they want. They don't want to come in and just pay for your time for the sake of paying for time. They want an end result. So we need to get better at focusing. What is the result that we deliver for clients? What is the outcome that they're going to get as a result of working with us? What is the solution that we are providing? Getting better at actually knowing what that is, and then being able to price based on that rather than our time. And the second one is timesheets, which we can go on to in terms of the fact that we don't actually need them. The other thing on the time bit is that, okay, the first thing is nobody cares about your costs. We've explained that. The second bit is that, your price is not actually based on your costs, because if you looked at your timesheets, and we had this in the big firms, you look at what's on the ledger and you would then have a think about, okay, well, we need to, the client's never going to pay that, so we need to write off this amount and that amount, and then we actually send an invoice of this amount instead. Or similarly, you think you've got a number on the timesheet, a WIP number, and then you think, actually, well, this client, they could pay a bit more. We just add a bit on and charge them a bigger amount instead. So if we're not actually taking what's on the timesheet seriously anyway, then what is the point in keeping those timesheets and using time as a basis of billing?
Yeah.
And the other reason on that is that, clients hate it. Clients hate paying for the hour. And you're always going to get clients quibbling about why did it take so long? So instead of, if you're going to only charge with the client what you think the client is willing to pay, and essentially those three words, willing to pay, is important, then why not just figuring out or get the agreement from the client in terms of what they're willing to pay, and that obviously involves you communicating the value of what you are doing, get their agreement of what they're going to pay and what they're going to get, and then start the work once you've agreed the fee. Because as customers, as humans, we want certainty. We don't like uncertainty. We want to know exactly what we're going to pay and what we're going to get. And that's how you get kind of happy clients. You don't get any fee disputes, and you don't get any issues about being paid. And you don't get people quibbling about how much time you spend, because they already know what they're going to spend and they already know what they're going to get before you start the work.
Okay. So communicating the value, then can we start then? Can we maybe use an example where I find it harder in my own mind to, I suppose, price based on value? Because I do try and do it with some things where it's almost like a bog standard project where it's very obvious what's got to go in terms of time from our side, what the outputs to the client and what the value is to them. That's more easy for me to understand it with. But HMRC inquiries, for example, dealing with them, I find it extremely hard to do in any form of like, this is the value to them of this part of the inquiry. Because an inquiry can go on for ages, right? It can go on for like 3 years in some cases. Sometimes there's a lot of work involved in it because the officer's asking loads of questions. Sometimes there's not. And typically you can only really see what is directly what's in front of you, which is usually to respond to HMRC and give them the information that they're wanting. And a lot of the time, I think it's hard to justify to clients like what the value is in that, because they might just think, well, you just collected the information that HMRC is asking you to get. Whereas that's not really what we do. We're like carefully, strategically thinking about what information should be provided, what shouldn't be, how to present it in a way that's going to reduce the chance of HMRC finding an issue or issuing a liability, and doing it in a way that's going to help hopefully close the inquiry as quick as possible. So like how can you do it in like those cases? Maybe I'm answering my own question a bit as I'm talking there, but like it just feels really difficult and unnatural right now to like come up with a fee for something like that. Where it can just keep going on and on. Because I could price based on, say, the first letter and then the second letter and the third letter. But then every time, like, there's still uncertainty for the client, I suppose, in some respects, because they don't know how many letters are going to be needed.
Yeah,
Does that make sense?
you've probably chosen one of the most difficult areas. But generally, your audience is all tax professional. And I help accountants generally to price. And you'd argue that actually it's probably harder to price for accounts and bookkeeping work than it is to private tax work. The tax work is quite easy because often you guys, and as tax advisors, we are generating a real result for our client that would result in a tax saving. So actually it's quite easy because there's an economic value to what you are delivering, and that is a tax saving essentially, or a reduction in. So for example, if you look at the HMRC inquiry, what is the potential tax loss in terms of the client's perspective? So if there's an inquiry and there could be a potential liability, an increase in the liability if HMRC are successful. So that's what we need to get better at kind of diagnosing at the start. So, okay, well, they've raised an inquiry on this. And even though it's not exact, but you could extrapolate and say, well, actually, what they're doing is they're trying to get into this, and this is the potential ramifications of what could happen. And genuinely, it could, if you didn't do anything and the client was left on their own to be able to handle it, then actually the HMRC could get quite a bit more from the client, even because the client just isn't prepared or doesn't know where they can push back and where they can't. So actually there is a number you can put on that. And by putting a number on it, that's kind of the economic value of what you can generate or help the client save for the work that you are doing. So it's all about trying to find a number. And most often in tax, that's quite easy to do, because in whatever bit of structuring that you're doing, whatever project you're doing, there is going to be a tax saving. But more often than not, most tax professionals give away their advice and their knowledge too easily, because we think that it's really easy to do, because we've done it for so long that we know, oh yes, there's this relief and there's that relief and there's holdover and there's this other relief where we can easily get a tax saving. But actually, the only reason you know that is because you've spent 20 years working in your field to know exactly which reliefs apply and the conditions of those reliefs and the exact circumstances in which those reliefs would apply, and when they wouldn't, in order to be able to comfortably and confidently advise the client that they need to do things in a certain way to obtain that tax saving. And then you only charge them for the 10, 20 minutes or the hour that you spend on it. But actually, the value you're giving to the client is huge. So if you actually sat back and realized, well, actually, without actually applying for these normal reliefs, what would the client have to pay? What is the ordinary tax treatment? If the client was trying to do it themselves, let's say, or an accountant who didn't have the tax experience that you had, and what would their exposure be? What would their liability be? So even if these are easy reliefs, there is a huge economic saving that the client is making, and that is the value that you are adding. So you can charge based upon that value. It's not and if you think, oh, I can't possibly charge, £1,000 or £5,000 for this, it's only going to take me an hour. You need to remember this, that it's if you can do something in an hour and charge £5,000, it's taken you 20 years to be able to do it in an hour. So the client owes you for the years, not the minutes. Remember that. So it's all about figuring out where does your value lie and being able to then capture a greater share of the value that you're providing, such that when you are generating lots of value for a client, lots of economic value for a client, you get a fair share of that. And there's no client that would dispute you getting 10, 15, 20% of whatever they are getting. That seems like a fair swap to the client. What clients hate is that when they're paying you, and you're generating a result for them. So they're just paying you for your time, but there's no end result. So what you need to be able to do is to stay in your kind of lane as to, right, okay, well, I know this area of tax. I'm going to stay in this lane, and this is where I can, advise and generate most value for my clients. And when I am generating this value, I'll get paid a share of that, which then allows you also to be able to work on some cases where you may have to provide, advice, but there's no gain for the client, and it allows you to kind of absorb that because you are making money and capturing greater share of the value when you are generating result for the client. So everything kind of evens out. So what I advise accountants is that your clients, everyone should be able to, you should offer unlimited advice, unlimited email and telephone support to your clients. But most accountants dread the possibility of doing that, because they'll think, oh, everyone's going to be calling me and we're going to be at capacity. And as it is, we're rushed off our feet and my phone won't stop ringing and my inbox will just be full of messages. But the problem there is not the fact that you're giving a client access to you. The problem there is you're probably too cheap And if you actually increased your prices to allow for that and gave yourself the room and only dealt with clients that valued that, then it would be fine. And we do that in our firm. So, all our clients have that unlimited access to us when they need us. And they don't call us all the time or email us all the time because they've got their own businesses to run. It doesn't happen. But what you don't want to do, if you believe you are truly the trusted advisor for your clients, don't put them off calling you or emailing you, because you want to be that person they come to when they have a problem. You want to be that person they pick up when they have a question. So don't be like the lawyers who, are charged for every minute and every second that they spend with you, which is why they don't have that place as trusted advisor. And we're lucky as accountants that we do, because we're able to offer that support to them without, nickel and diming them for every phone call or email conversation that we have with them.
Mm-hmm. So, because obviously before you start a project sometimes, let's say, I don't know, a client wants you to do some tax planning for them, and you don't know what release might be available for them at that point, and you don't know what the numbers are going to come out with on the other side. How can you figure out what that value is up front? Because you can probably come up with some guesstimates of what the savings might look like, and maybe some ranges. But ultimately, until you've done the tax planning and until you've looked at all the data and done the calculations, you will not know the amount of tax that they could save by doing something right.
Yeah, so this is where we need to be a bit more savvy. We need to kind of stay in our lane and not just be a generalist tax advisor, meaning that when somebody comes to us, we have to kind of research whether something is possible or not. So stay in your lane, have a specialism, like I think your employment taxes, right? So
yeah,
have, whether you're R&D, whether you're inheritance tax, whether you are corporate tax, have a specialism that you can say, right, okay, this is my area. This is my area of expertise, and I can help you in this area, and then come up with productized solutions. So let me, in terms of dealing with this through a real life example. So, in our practice, we still do tax projects. And one of the things we do is to help clients who have lots of profit in their company to extract that tax efficiently. So we'd get an inquiry on that. And our process is, initially, we need to diagnose the problem. So in order, like you rightly said, in order to put a tax plan together, we need to know and get under the bonnet of the client's business, their circumstances, etc. So typically the way we do this, I used to do this for free, and you can start off doing it for free as a diagnosis, but now we have a paid consultation. And we can do that now because we've put enough information out there for clients to digest. We've given them ideas. So for example, I wrote an ebook back in 2014 called 10 little known tax strategies guaranteed to save business owners thousands. And in that, I gave away 10 strategies, and they can go and they can have a look and they can read about how to do it. But when they want to actually implement it, they need to talk to an expert, because clearly there's more to it than just what I wrote in that short ebook. So people get in touch off the back of that because they see this guy is talking differently to other accountants. He's got some expertise in tax and he's talking the lingo of business owners. So they get in touch and they book a strategic consultation, which is essentially an area we can come in. I can talk about their specific circumstances. I can find out from them, where are they at in terms of, what's the current problem? And typically off the back of that, so then what will happen is I will take all that information, and then I will book a second meeting if I think I can help them. So let's say it's a client that's come to me and there's a lot of profit sitting in the company, but they've talked about, they want to reinvest that into property ventures and maybe into other businesses in the future and that sort of thing. So a kind of productized solution for that, which I'm sure most of your listeners would be aware of, and it's something that many practices do, is to suggest the holding company structure. So putting the holding company on top, doing the share for share exchange, and then creating a separate property subsidiary. So you're able to create a war chest and all that kind of good stuff. Now, even though you and I might think this is standard stuff, to a client and to clients who don't have kind of, accountants who have tax knowledge, this is actually something which is quite specialist and can generate huge value add for them and huge tax savings for them. Because if you weren't able to provide that advice and that solution, what's the alternative? The alternative is I've got to take a huge dividend out in order to then use that to go and buy a property. So my tax cost is nearly 50%. Whereas if I didn't do that, then I can limit that to 25%. So I'm making 25% saving essentially. and being able to reinvest more of my profit into property and doing it in a way that doesn't involve intercompany loans and all that kind of good stuff. So I would then prepare a presentation, go away and say, right, okay, let's book in another meeting. The presentation would recap their current situation to say, this is where you are. This is what you're looking to get to. This is what will happen if you don't do anything, or if you were to start to reinvest in property as you are now, this is the tax cost. So we put a figure in there, and that then becomes the anchor. That is the figure that they're going to now use to compare the value of what you're going to deliver against your price. So let's say if they don't do anything, the tax cost is going to be, £200,000. We then introduce our solution to say, well, if you put a holding company on top and did this, X, Y, Z, then you would save, £100,000. So suddenly now we now have a number which they can then compare our fee against when it gets to that point of saying how much it's going to cost. So we take them through it. We talk about the process of what's required, the share for your exchange, all that kind of stuff, company secretarial, blah, blah, blah. And then we say, right, so what is what are the risks involved? Because although you and I might think, oh, that's easy, share for share exchange, you get clearance and all that kind of stuff, there are still risks involved. As you might see, you may, dispute it. And, what are the implications if this wasn't done correctly? If you weren't using a specialist who didn't know that you had to get clearance in a certain way, and if you didn't get clearance, then what is the implication of that? Implication of that is that you'd be subject to capital gains tax on this amount if it wasn't done correctly. So, that is the potential exposure and the potential risk for the client. Regardless of the fact of how low it is in our minds, because we've done it so many times, it's still a risk for the client, were they to do it themselves or were they to do it with somebody who's not a specialist. So then when we come to the slide where I now talk about the investment in the solution to make it happen, and I present the price at that point. So here I am on that meeting, diagnosing the problem, telling them, right, this is your current circumstance. This is what will happen if you don't do anything. This is the potential solution that we are advising you follow. These are the risks, and this is the process that we will go through to mitigate those risks for you. And then we come on to the investment to make it happen. So I'm actually presenting to them the price. And I can do that, I don't need to know the number of hours. I base it on value. And I know that by charging whatever I'm getting, it's going to generate more than enough return to deliver a profit. So the way I look at it is that we charge, let's say, up to, depending on the size of the savings, so it could be like 10 grand for a holding company formation, putting a group structure in place. Now, the tax professional listening to this think, wow, 10 grand for a holding company, it's easy stuff. Yes, it's easy stuff, but it's only easy stuff because we've been doing it for so long. That doesn't mean it's any less valuable to the client. And what, and that's, that, and it's a 9-step framework that I've put it of how I price one-off projects. And I mentioned that in the book. So, I kind of talk through exactly that process. And I also teach that process to accountants in my community. But essentially, it's kind of moving away from the time that you spend and actually thinking about the value to the client. And I know I'm going to make money on it because, cost accounting has lots of problems. And there's a really good book by a guy called Dr. Reginald Lee. Unfortunately passed away last year. He was on my podcast a couple of years ago. He wrote a book called Lies, Damn Lies, and Cost Accounting. Really good book. But it kind of just, it does away with the whole notion that the cost accounting as we know it and the way that we use it to make decisions, he just, completely poo-poos it out the water. But the way you need to look at it is, okay, I've got a potential project which I can deliver using my existing capacity. So I'm not going to have to go out and hire someone to deliver this project. So whatever I get from it is essentially going to be profit. And that's how you need to make your decisions. It's all about how much money can I make against how much extra capacity I'm going to have to bring on to be able to earn that income, essentially. Mm-hmm. And for me, doing that project, I can do it within my existing capacity. I know what's required, and therefore I know that whatever that number is going to make us money. So that's kind of, in a nutshell, the 9-step pricing framework that I use for one-off project.
So
Just to make sure I'm following then, so you're saying in the past, that first meeting you'd have offered for free, but you now charge for it.
Mhm.
The second meeting that you have where you've kind of gone away by the sound of it, you've had to think about the information they've given you, and you've then come up with this presentation that you taught them through. Do you charge for that second meeting as well?
No, I don't.
No, so that one's like almost part of
Exactly.
the first one in a way. But then all that stuff that you've done in between, you don't charge for that, because
Mhm.
really what you want to do is you want to be able to position the value that you can provide to the client so that they will pay you the fee to actually do the implementation of it, I suppose. Am I kind of following?
Exactly. Yeah. I
Yeah.
believe we need to invest that time into preparing and doing a bit of digging in terms of that diagnosis. So the initial paid consultation is just now my hedge in terms of, okay, I'll get on a call with you. We'll see if whether anything can be done or can't be done. And if something can be done that you can go away and really easily do, fine, you're happy to go away and do it. But if there's something that could be implemented now that we could help you with, then we will go away and we'll put something together and we'll meet again to go through that solution and present to you the options of us implementing it for you and what your investment would be to make that happen.
So what happens then sometimes if you say you got more than one option for them? Do you present all the options to them and the price for each one?
Yeah, so typically it's, I mean, we are the advisors, right? So the client's always going to ask, well, what do you think? What would you do? Type thing.
Mhm.
So
Yeah.
in terms of, we would make sure we properly diagnosed it in the first meeting. And if there's any other information that we need in between, then we would get that in advance before then putting that presentation together with the actual advice as to, yes, you should do this. And these are, this is what it's involved and this is the investment to make it happen. And even when I
Okay.
present the investment, I give 3 options. So there's something else I talk about. And this stems from my learning into pricing psychology and behavioral economics about giving options to clients, that when we're given one price, it's an ultimatum, take it or leave it. When we're given 2 prices, it's kind of binary, should I, shouldn't I? But when we're given 3, it's just right, just like Goldilocks's porridge, right? So, and most people, research has shown, choose the middle option because, you know, they don't want to miss out on stuff by choosing the middle, the basic one, the premium one, maybe a bit, but you can anything that any project that you put together, if you can give 3 prices, and I talk through this in the book and in my 9-step pricing framework as well, that you can actually figure out, or you can actually add like a tick list technique. So you have like typically for tax projects, the way I term them is my premium option is called a no risk package. My middle option is called the can't remember now. It's in the book, but yeah, it kind of no risk package, the kind of the full package, and then you've got the essential package. And in the no risk package, and something here that would be quite useful for your listeners who are working in tax, is that with tax, there's always some risk. And if you can take away risk for a client, then that is hugely valuable to them. So you can get paid a premium for taking risk away. So what is a practical example of that? Well, if you took the risk away, essentially, of them having to pay the tax, if HMRC inquired into the arrangement and had to pay the tax, then that is a huge value add for the client. So in that premium option, I have a fee guarantee at the end, which is ticked. So the no risk package gives you HMRC defense and fee guarantee. So that package, if they take that package, that means that if HMRC inquire into this planning afterwards, then our costs of defending that inquiry will be covered within this package. You won't have to pay us anymore. And no matter if it goes all the way up through the tribunals and the courts and you end up having to pay the tax that we have managed to save you that you haven't paid because we've done the planning for you, then we will give you our fees back. There's a fee guarantee. And that is hugely valuable. And I can get a 30-40% premium for people who take that premium option by adding that guarantee in. Now, in reality, a lot of accountants are very risk averse. I don't want to offer that, Well, why not? Because essentially you're offering it anyway. So if you're offering it anyway, in the sense that, let's think about it. If you did something for a client and, if it's something kind of plain vanilla and then HMRC came knocking and there was an inquiry and had to pay the tax anyway, the client will be pretty miffed, and they'll probably come to you and say, look, I paid you all this money and I didn't actually get the tax saving that you said I was going to get. And either A, they may put in a claim of negligence against you and you have to fork out, your fees and pay them back and to keep them sweet. Or B, they probably wouldn't work with you ever again. So you lose out on future business plus any potential business from them in terms of referrals. So, we just need to get savvier in terms of how we price, and when we are generating value, collect a greater fee for the times that we are generating value and taking risk away for the client. And most often in these cases, the risk is small, but by adding it in there, you're completely taking that risk away for the client and taking a premium in return. And you've done it for so long and the way you're going to do it. And if HMRC inquired, you'd have no issues with pushing them back and telling them where to go, because this is plain vanilla stuff and we've done it loads of times before. But there's always a risk. There's always a tiny little bit of risk because it's all open to interpretation, right? So there's no harm in putting that fee guarantee in. And what that enables you to do is to get a massive premium on the fees that you can charge.
That's really interesting, actually. I've got so many questions, but I know I haven't got enough time to ask all of them. So I'm trying to figure out which ones are the best ones for me to now ask. So just on the point of all the options and stuff then, so I'm talking about options from a planning perspective. You were basically saying they're going to ask for us what our opinion is anyway in terms of what they do. So it sounds like you pretty much, that's the one that you talk them through. So, I know a lot of Big Four do this, for example, where it's almost like an upfront piece of work that they charge a lot for before they get to the proper piece of work, which is where they diagnose, I suppose, what you're doing, but then they'll give lots of different options and stuff, and they charge a lot of money for that. And is what you're saying is basically that you don't even think that you should necessarily do that, and you should almost skip that point and get to what you think is the right answer for the client.
Yeah. So I guess in my mind, my motto is give away advice, charge for implementation.
Mm-hmm.
Right. So, and if you're staying in your lane, because at the end of the day, clients want a result and they want a solution or learning outcome. Big Four firms, they have a different model. They need to charge hours and, they have big clients who are happy just to pay for reports that never get read or nothing happens with them. In our world, I'm talking kind of, smaller firm market or even, any tax consulting firm, anyone who does tax projects, clients come to you because they want a result. They don't come to you to get a 10-page report to then read and digest, because they're coming to you because they want a result. You're the expert. They want you to diagnose their problem and tell them what to do based upon your experience and your assessment of their situation. So the reason why many accountants, tax advisors continue to do reports and charge reports is because you think you have to do them because that's the way you've always done them and that's how you were trained. But actually, your clients couldn't care less about the report that you write. All your clients want is that result. Think about it. They're coming to you. They're paying you to get a result. They're paying you for peace of mind. They're paying you to not get inquiry from HMRC. They're paying you for a result for you to save them tax. That's what they're paid for ultimately. They couldn't care less about the how. They just want it done. And if you can tell them, you pay me X, you get Y, that's all they need to know. All the fluff in between is, it's our doing. It's our kind of, pretense of kind of, making it look as if we are doing work. But essentially, it's the client just wants the end result.
Yeah. I mean, in some ways then, because obviously people aren't paying you anything until they ask you to implement. But that fee that you get at the stage of implementation, because you've already given so much away for free, I suppose there's a higher chance of someone saying yes when you get to that point. And also the fee that you charge at that point would be enough to cover every stage, I suppose, if you were to have charged for every stage along the way. Is that kind of a fair assessment?
Exactly. You got it, Jack. Absolutely. Yeah. So for example, I mentioned at the beginning that we got this fee of 135,000 that even my ex-bosses at PwC would have been proud of. And it was exactly that. So there was a lot of meetings in the run up to that in terms of figuring out what can we do. So in that situation, this was a situation where we had a client who was two brothers who ran a property company, property investors, and they fell out with each other. They couldn't stand the sight of each other, and they wanted to part ways, kind of split the business. So there was a lot of trying to figure out, okay, so what can we do here? And there was a lot of me kind of, demergers was not something I'd done before, but trying to figure out what are the solutions here, talking to other tax advisors, talking to some experts, and me spending time doing that. But ultimately, I knew what the client wanted. The client wanted to be able to part ways and find a solution for that. So I invested a lot of time trying to figure out what the solution was. Then I found a solution, and then I was able to go to them to say and put a presentation together to say, right, okay, well, this is what you've come to me with. The problem you've come to me with is that we are two brothers. We run this company. We can't stand the sight of each other, and we wanna take half our share and go and do this ourselves. So really, the default position is that what you need to do is basically sell all your properties and take the cash out and, do it that way. And that the tax cost of that is going to be X, capital gains tax, the stamp duty, etc., doing all of that, or you liquidate. So there were two things that they could do, which involved huge tax liabilities by being able to get them the result that they want, which is meaning getting their share and then going solo. So I think there was a tax cost of about 2.8 million doing it that way. And then I introduced, actually, I have gone around and I have found a potential solution for you. It's quite complicated. It's still called the demerger. We went through the process of how the demerger works and all the rest of it. But ultimately, then I show them at the end that, there's the three options you can do. One, you could, sell the assets. Two, you could sell the shares, liquidate, etc. Or three, you could do demerger. So in option A, your tax cost would be like 2.8 million. Option B, 2.7 million. Option C, free of tax, completely free of tax, no tax liability. If we did it in the right way, if we managed to get the demerger done in the right way, then you'd pay no tax at all. But then when it came to my investment page, for us to get this done, I listed it, three options. The top option was, £147,000. And they looked at that, and I put at the end as well in terms of the percentage of the tax saved, and it came to less than 5%, around 5% of the tax saving. So when a client looks at that, it's like a no-brainer to them. It would cost them 2.8 million to do it in the way that we had thought. If we implemented this demerger, which I would help them with and project manage and give them a fee guarantee and all the rest of it, it's going to cost them only 5% of the tax saving. So it's a no-brainer. And then when it comes to, and we got 135 because, again, another tip for you in my pricing process is that I never just offer a discount because a client asks for it, but you can offer a discount if a client does something for you in return. So in my payment options, and again, what you want to do is agree how a client pays before you start the work. So I have an authority to proceed page. So if they want to go ahead with it, once I've gone through the options and I've given them three options, then they have to sign a form. It's not a full-blown engagement letter. It's just a one-pager, which says which options you want to go with, which of my no-risk package, peace of mind, or essential option do you want? You've got a ticket. And then how do you want to pay? And the two options I give them are payment in advance, which gets a 5% discount, or payment in installments. And I typically have installments over, a period of time that typically it takes to complete the project. So they went for the payment in advance with a 5% discount. Hence, that's the 135 number came from that because I got the fee even before I started the work. And then in terms of implementation, if you look at costings, it didn't cost us anywhere near the £135,000 to deliver it. And that also included access, paying somebody else, a tax expert in the country who was charging me £600 an hour to do most of the legwork on that particular project. But you can see there, he knew a lot more about tax than me, but I knew a little bit more about pricing than he did. And you can kind of do the numbers in terms of the 135 take away 14 to figure out kind of who kept more in that arrangement.
Yeah, it's really interesting. I was going to ask about discounts. I suppose when I was thinking about it, I was more thinking of if people wanted to buy numerous things at once, for example, or maybe have recurring business with you or something like that. Do you offer discounts in those cases at all, or bundles, for example, or does that not really happen?
No, not really. I mean, discounts is something that I would veer away from because the moment you give a client a discount, you're kind of training them to always ask for a discount when you're talking about price. And if you give them a price and they ask for a discount, you give them a discount, then there's a kind of a loss of trust there as well that, why didn't they give me that price to begin with? Or how much more could I have got off? So discounts are never a good thing unless they're given in exchange for something else. So either by paying in advance or, you could say, well, if you give me 3 referrals, then I will reduce the price by, 5%, 10% because It saves me spending money in marketing, something like that, where the client is doing something for you in return, then offer a discount in those circumstances. But otherwise, don't.
Yeah, fair enough. But what about recurring work then? Because a lot of these things sound like one-off projects for you. And obviously that comes with its own risk, right? Because you've got to constantly, I suppose, keep getting these one-off projects. So I know you've got like your positioning and your marketing and stuff, which I'm sure helps with that. But what about recurring fees at all? Do you kind of have any recurring fees in your businesses, any recurring fees that you kind of suggest people try and get? So at least they've always got like a backstop of fees coming in, if that makes sense.
Yeah, most of our business is recurring fees. So really, when it comes to pricing, and the book goes into a lot more detail on this. When it comes to pricing, you only need to know two ways to price: how to price recurring projects or work, and how to price one-off projects. And we've just talked about the one-off projects. The one-off projects are arguably much easier to price than recurring. So most of our practice is recurring. We are a accountancy practice. So we do accounting, we do accounts, we do tax, returns, payroll, all that kind of stuff. So there is a process that we go through in terms of pricing recurring work. In terms of how to do it, again, then the positioning comes to it. So first of all, it's all to do with, again, if you boil it down, it's all to do with price and value. How do you communicate and project your value so that you can get a higher price from clients? And a lot of what I talk to accountants about is that how are you perceived? Because let me share something that might help an analogy. So in the book, I talk about the value iceberg. So when you might be thinking, well, what is value? So if you think of value like an iceberg, where the top of what you see, so above the surface, is the perceived value that you deliver, or the perceived value in your customer's mind about you. Below the surface is the actual value. So you might be all well and good talking about the actual value you're going to deliver in terms of, the tax savings, or the fact that, you give peace of mind to clients, or, the fact that if you're doing their tax return, or you're doing, the advice side, then they're less likely to get, say, an inquiry from HMRC. That's all the actual value. The fact that you return phone calls quickly and reply to emails fast, things like that, that's the actual value delivered. But the client, or the prospect rather, isn't able to feel that, hasn't been able to experience that until they come on board with you as a client. So the only thing they have to go on before they come on board with you is the perceived value, is the stuff above the surface, the tip of the iceberg. So that's all the things to do with how are you positioning yourself in the marketplace? Are you a generalist or a specialist? What is the experience like of having a meeting with you? What is the experience like of booking a call with you? All these things. What does your website look like? What do your social media profiles look like? All these things, you're building up a picture of perceived value in the client's mind before they've even got in touch with you. And this is all forming in their mind. And remember, the higher the perceived value in the minds of the client, the higher the price that you will be able to charge, because there is only a correlation between price and value. So, for example, how can you increase your perceived value? Well, things like specialization. So, for example, I talk to accountants about this, that when you try and appeal to everyone, you actually appeal to no one. So if you want to get better quality clients paying you better and higher fees, then you need to really laser focus on who you serve. You need to really specialize and niche down into a certain area, because then you're automatically seen as the expert in that area. So, for example, a couple of years ago, we set up a separate accounting firm called Capture Accounting. It was actually a marketing test. I told my accountants audience that I coach and mentor, that rather than just teaching you about marketing, because I was, all the messages I was getting was that we need help with how do we get new clients. So I said, rather than just teaching you, I'll do it with you. I'll set up a brand new firm with a new name, a new logo, a new website, a new audience, and everything that I do, I will share with you in real time. And the promise of that course was 0 to 100K in 12 months. If I didn't get there, it would be serious egg on my face. Thankfully, we got there in 9. But the audience that we chose was content creators and influencers, the Instagrammers of this world, the YouTubers, etc. So we named it Capture Accounting. We went out there with a very specific audience in mind. Because when you're already clear about who you serve, when somebody lands on your website and they see that you specialize in working with people like them, automatically you are seen as more valuable than a generalist. People are prepared to pay a premium to work with a specialist than they are with a generalist. Think brain surgeon versus GP. Because people want to know that you understand their business model, that you work with people like them, that there is social proof around, what you're doing. Just like, when you're on Amazon, you're buying something, you are always looking at the reviews. When you're going to a restaurant, when you're going to stay in a hotel, you're always looking at reviews. So the fact that the social proof that you deal with people like us, that you understand our business model, that helps to increase the perceived value of your offering. And coupled with that, when you do become specialist, the idea is to go inch wide, mile deep. So go narrow and go deep into one particular area. That does two things. One, it helps you to charge a higher price because people are happy to pay a premium to work with a specialist, and it gives you a differentiating factor with other accountants or other tax advisors because you are now the specialist. But two, you're able to deliver whatever you're going to deliver in a much more efficient way because you're dealing with the same type of clients or the same type of work, which means that you can do it a lot faster, which means that when people ask you questions, you already know the answers because you deal with people like them all the time. So for example, these content creators and influencers, the first couple of clients that we took on, like to learn a lot about how do we set up Zero in the right way? How do we deal with VAT issues on distance selling, on EU VAT, non-residence implications, because we had quite a few influencers moving to Dubai and things like that. We had to learn all those issues for the first couple, but that knowledge stays with us. And when the third and the fourth and the fifth client come along, the answers are available to us at the top of our head. The reason why most accountancy practices and accounting firm owners don't make money or are always stressed and overwhelmed is because they are trying to deal with 57 different industries. One day they're dealing with CIS. Next minute they're dealing with dentists and superannuation. Next minute they are dealing with property investors asking about buy to let. Next minute they're dealing with the construction industry or EU VAT for content creators, for example. So when you laser focus your efforts into one particular area, you can A, charge more, and B, you become a lot more efficient, meaning that big gap in between the two is your nice, lovely profit to take home with you at the end of the day.
Yeah. You know what? I'm really looking forward to reading the book now over Christmas because even just from this chat today, I've figured out or kind of realised so many things that I can be doing differently and things that I can, I suppose, start trying to apply with the tax advice that I do. So yeah, no, thanks a lot for that, Reza. If people want to learn more about you or just get in touch, where are the best places for them to go?
So I'm most active on LinkedIn, so feel free to connect with me there. I will send you the link to the book so you can share that in the show notes. I send out free copies, so anyone that wants one then could just go and click on that link in the show notes. And if you want to know more about the coaching and mentoring program that I done through the Profitable Accountants community, then you can go to my website, which is rezahooda.com. And if you're a podcast, clearly you are a podcast listener. I also run a podcast called the Profitable Accountant Podcast, where I do weekly episodes, around 15 to 20 minutes, bite-sized episodes on one aspect that you can improve in your practice every single week, together with interviewing other accountants that are doing great things from time to time.
I hope that, like for me, this episode has given you an insight into a different approach to billing that could revolutionize the way you bill. Reza has plenty of resources available if you do want to learn more. And whilst, as I'm recording this, I haven't read his book yet, I can suggest getting a copy as I'm pretty confident it's going to be packed with useful information. I've had a copy for Christmas and I'm going to read through it very soon. All links mentioned throughout this episode are included in the show notes at thetaxprofessionalspodcast.com/TTPP91. That link includes links to some of Reza's resources and also a link to the Tax Advice Masterclass and just all links mentioned throughout this episode generally. If you enjoyed this episode, then make sure you don't miss out on any future episodes by heading on over to thetaxprofessionalspodcast.com/subscribe to sign up for email notifications. Episodes are bi-weekly and released on Mondays. But that's it for this episode. I hope you enjoyed the episode and have taken away some useful points to help you to progress, develop, and improve your career. Until next time.